Record the map the next hour. Here's Sandy Hill.
Okay, Steve, we'll look forward to that. It's 22 minutes before the hour. For the average small investor, it's absolutely staggering to imagine that someone could make $50 million on Wall Street in just 1 year. That is, though, what the government says arbitrageur Ivan Boesky made. But officials say he made it illegally. To explain for us what Boesky did, how he did it, we are joined by our economics correspondent, Robert Krulwich.
Thank you, Sandy. Well, I'm going to explain what Ivan Boesky did as best I can. He did it, by the way, very well. He was the premier risk arbitrageur on Wall Street. Now, I'm guessing that a lot of people out there do not know exactly how to play the game of risk arbitrage. So let's take a very quick lesson just to begin the conversation on how this works.
Arbitrage in 6 easy steps. Step number 1, the tip. Something tells me, I don't know, instinct, maybe a hot tip, or I read it on the front page of the newspaper, but I decide that some company is about to be taken over in such a way that its stock is about to soar. Step number 2, research, research, research. I check out this company's assets, liabilities, book value, who's buying, who else is interested, how much money they got. I research like crazy because right now, the stock in this company is $50 a share. I want to know how high could it go, and my research says it probably will go to $100 a share. Step number 3, the plan. My plan is to buy low and to sell high. If I'm able to buy early in the game, say 1 million shares of stock at an average price of $75 a share, when the company is actually purchased, then I stand to earn on every one of my 1 million shares $25 profit. Now, times 1 million, 25 is $25 million for me. That's my plan. Step 4, making the buy. I disguise my purchases because if word gets out that I am buying, then everyone else will buy and the price will shoot up before I am ready. So, to be cagey, I buy, but I also sell just a little, and I hire people all over the world to buy for me using dummy corporations with names that sound normal, names like Corpco or CoCorp or InkCo, and I keep buying until I get that 1 million shares. Step 5, time to worry. What if something goes wrong? I have borrowed $75 million to buy these shares. Now, if the buyer cancels, or if the government says it's illegal, if the deal dies, the stock could go back to where it started, fall 25 points, maybe in a day, and I could lose $25 million plus interest. So I hire lawyers to monitor any relevant court case anywhere in the country. I hire lobbyists, I hire economists, I hire spies. I've even got a guy hanging out at the airport just to tell me which executives are going on which Lear jets, going with whom and going where, just so that if anyone makes a move, I know first. Step number 6, the outcome. If I guessed right and the company is bought for $100 a share, I get a 33% return on my investment in 1 month. That's 396% return annually, and it's on borrowed money. If the deal dies, I've lost the same amount, plus I owe interest.
Arbitrage, then, is a game that perfectly balances fear and greed. You have to have nerves of steel to do this.
And, of course, in this case, the government says there was too much greed on the part of Boesky's. But what exactly is the crime?
Well, let's go back to our lesson here. Go back to step number 1. Remember that the guy read something in the newspaper, heard a rumor, or went through the stock tape, remember, and thought, something's going on here. I think I'm going to place a bet. The government says that Ivan Boesky did something quite different from that. He got on the phone with a person who worked directly for the presidents of major companies. This guy would tell him, Ivan, I know General Foods is about to buy Nabisco. Now, this is not a rumor. This is a real corporate secret, and it's illegal for an insider to tell such a secret to an investor. Boesky knows that the man is breaking the law. Now, this is amazing, really. He makes a formal deal with the guy anyway, a business deal, a handshake. He says, I will pay you 5% of all the profits I make using your information. He makes $50 million in profits. He owes this source, this one guy, $2.4 million. Now, the source, maybe because he was happy out of his mind, got loose lips. Tells a friend, I've got this arrangement with Ivan Boesky. The government learns about the contract, finds the witness, logs the phone calls, discovers there were hundreds of calls between Boesky and the source, sometimes 20 a day. They go to Boesky with this evidence. He cracks. And interestingly, Boesky never paid the man the money. It is no crime, getting back to your original question, to be a risk arbitrageur and bet on companies. But there's really no risk if you know the outcome ahead of time, and that's not fair. Boesky played the game by cheating. He could go to jail for up to 5 years for this. So,
It's very well told.
Thank you.
Excellent. And as one of the SEC people said, it's sort of like playing poker, isn't it, with marked cards?
well, now the whole thing is very exciting because we now discovered that Ivan Boesky, for the last few weeks or maybe longer, has got a
The tape recordings.
microphone on him. Everyone he talked to. So they're looking around for other formal deals like this one. Maybe there were some.
It grows more fascinating.
Yeah.
Thank you. It's 17 minutes before the hour.